Moving on, and we're turning our focus to the markets. We were fortunate enough to be joined in studio this week by author and analyst Elaine Kub to discuss some of the recent movement in the grain markets. We began our conversation by going over recent spikes in fertilizer prices. We're joined now with Elaine Kub, author and analyst. Elaine, I want to start today's conversation talking about fertilizer. The American Farm Bureau put out a report. They've got producers saying prices are up 300% for them this year when it comes to fertilizer. How do you see that the price of fertilizer impacting this coming growing season?
Well, there's absolutely no doubt that it's higher than last year, and when you go to look at your overall cost of production, it will be higher than it was last year. From that effect and the effect of higher fuel prices and higher machinery prices, higher labor prices, higher everything prices, you're going to need another 50 cents per bushel, let's say, to get profitability out of your corn crop. So it's not a disaster. Now, part of this thing, you mentioned the 300% over last year. First of all, prices for a lot of things were depressed in the 2020 scenario. So it's not too surprising to see some things recover, but it's also sort of exacerbated in a local scenario when you say 300%. From a nationwide perspective, anhydrous prices or urea prices are actually more like 143% higher than a year ago, and actually only about 13% higher than the 2012 high. So it's not as panic-inducing as it sounds just on a local thing. If you just looked a few months ago and now all of a sudden you're getting a new bid, and it's really alarming. But overall, it's going to be doable for folks to pay these prices, even as high as they are. We're talking like $1,300 a ton for anhydrous, which is as high as it's ever been.
We hear this time of year people start to talk about planting intentions, and will the price of fertilizer impact what people are planning on for next year? What's your take on that conversation?
I think in the United States, my impression is that farmers have a rotation and they typically stick to it, and I believe that we will have enough fertilizer available in the United States for people to get planted whatever they want to get planted. Globally, though, it's a different scenario. I think we really will see skimping on fertilizer applications, particularly for wheat in Russia and Europe, because that's where the fertilizer story, the nitrogen story, and the natural gas behind the nitrogen story is really, really hot, and that's what's driving these international fertilizer prices. So that's why I think globally, yeah, it's going to have an effect on yields just because of people skimping on fertilizer. But here in the United States, I don't really know if anybody's going to be switching away from corn based on this factor alone.
You mentioned the global aspect of the markets. Let's talk about South America. Of course, this time of year, we're all closely watching the weather situation. Is that the biggest driver of the markets right now? We've seen some big fluctuations in the markets because of that.
Yeah, I think so. I think day to day, you wake up and you see soybeans up double digits or down double digits. I think it is almost directly related to whatever the forecast for South America happens to be. And that's, of course, legitimate this time of year because, I mean, we don't have a lot going on in North America, but also they have been dry. So anytime they do get, a burst of precipitation, that is helpful. And the global supply and demand scenario really depends on what's going to come out of Brazil and Argentina here in early 2022. So it's very legitimate for this to be a weather market based on South American weather. And I think that's absolutely what we're seeing here, probably through the end of December, trading on those South American forecasts, and also to some extent, whatever the funds are doing to reestablish themselves or rebalance their holdings through the end of the year.
Imagine the pace of exports had to play a factor in those markets, the direction they're going each day as well, though. What do you make of the pace we've seen over the past few weeks?
Yeah, we've seen a pretty steady pace of daily export sales announcements, but that's not too unusual for this time of year, and we are the cheapest market, obviously, until South America comes to the market, as I mentioned, in early 2022. So it's not too surprising. We need to see more of that. We need to see that continue.
Elaine, we began this conversation talking about profitability as it relates to fertilizer. I want to kind of jump back to that and talk about for corn, soybeans, and wheat. What are you seeing as we approach the new year for that profitability level?
Yeah, I mean, as I mentioned, things are more expensive than they were last year, but honestly, when you compare that to the market prices, so let's say it costs you $9, $9.50 to grow a bushel of soybeans in 2022. The new crop market for 2022 is offering you at least $11 cash price. So there is profit in it, and there's certainly profit when we see wild wheat prices. Now, wheat prices are very wild from day to day, so it may behoove someone who's planning on, or who has winter wheat planted, to get some of that locked in before things get wilder. But the profitability is there. Hope is not lost for 2022, despite how expensive inputs have become.
Finally, Elaine, the Fed announced, this is some late news for our broadcast today, but the Fed announced that they're going to be raising interest rates in 2022 3 times. How did you see that affect the markets right away, and what do you expect long-term for that announcement?
Well, it seems like the investors of the markets generally see that as a positive sign that the Fed is going to responsibly try to handle inflation, right? And this goes back to our discussion about input costs. When things just keep on getting higher and higher priced nominally, that's hard for businesses to deal with. So to have the Federal Reserve come out with a clear statement that they want to deal with inflation is overall positive for businesses like farmers. And we haven't seen the markets freak out about these interest rates yet. So far so good.
Final word is yours this week. What risk management advice or market advice would you like to leave our viewers with today?
Well, ordinarily folks don't necessarily get started on new crop sales this early, but it's not a bad idea when you mention the profitability that is there and the possibility that you could have continued, negative movement throughout the end of December.
Elaine, always appreciate seeing you in person this time. Thanks for making the time for this program.
Well, it's a pleasure to be here.